So check this out. Aeromexico just had one of its best quarters ever, but at the same time, its profits got chopped in half. How does that even happen? Well, we're going to get into it. This is a fascinating story about financial muscle running head-on into some really serious threats, a real tale of profit and peril.
Okay, so let's just jump right into the big puzzle here. How on earth can a company's revenue shrink, but its performance actually soars? It sounds completely backwards, right? An airline brings in less cash, but somehow has one of its most profitable quarters ever. It seems like a total contradiction. But digging into the answer here, well, it tells you everything you need to know about their strategy. All right, first up, let's break down the numbers from this really contradictory quarter. And you can see the whole story right here. It's a total mixed bag. On one hand, you've got the headwinds, the tough stuff. Revenue was down about 4.5%. And get this, net income just plummeted, down by more than half. Ouch. But then you look at the other side, the silver lining, and wow, a nearly record-breaking 18% operating margin. They pulled that off by being incredibly strict with their costs. We're talking everything from fuel to staffing. I mean, the revenue drop is one thing, but that net income figure, a staggering 54% drop compared to last year. A fall that steep is what makes their underlying operational strength so impressive. It's kind of mind-boggling. So, the big question is, how did they do it? How do you stay that profitable when your income is tanking? Well, it all comes down to a very specific playbook. Okay, so their strategy was basically a three-part plan to keep the plane flying high, financially speaking. First, they were absolutely ruthless with cost discipline. Second, they got really smart with their capacity. They basically trimmed the fat, cutting back on less profitable domestic routes so they could double down on the strong international markets. And third, they just boosted efficiency across the board. You know, better fuel usage, optimizing how they schedule their crews, the whole 9 yards. And you know, this quote from the management team really says it all. They called it the second best third quarter in the company's history. Think about that. Even with revenue dipping, they're framing this as a huge win. And it really just shows you how resilient they've become. It's proof that their playbook is absolutely working. Okay, so on top of all this operational excellence, Aeromexico wasn't done. They made another massive move, this time on Wall Street, to really power up for the future. We're talking about roughly $220 million. In November 2025, right after this quarter we're talking about, the airline went public in the US, and it was a success. That IPO gave them this huge injection of cash to work with. So what do you do with $220 million? Well, for Aeromexico, it's basically rocket fuel. The plan is to use that money to renew their fleet with newer, more fuel-efficient planes, to pour money into growing in those key international markets, and just generally to make their balance sheet stronger. It's like they've built themselves a strategic war chest for whatever comes next. But, and this is a big but, just as they get this huge financial power-up, a massive storm cloud starts gathering on the horizon, and it's threatening what might be their single most important partnership. To really get what's at stake here, we need to talk about their joint venture, or JV, with Delta. Now, this is not just some simple code share agreement. A JV is way deeper. It means they basically act like one single airline on all the routes between the US and Mexico. They coordinate schedules, pricing, sales, the whole thing. It lets them dominate that market. And let me be clear, this JV is absolutely critical to Aeromexico's strategy. And this is where the drama really starts. This regulatory showdown has been escalating fast. Back in September, the U.S. Department of Transportation just, out of the blue, ordered the whole JV to end. Now, a court has stepped in and put a temporary block on that order, but the key words there are temporary and for now. This fight is nowhere near over. And that's the thing. The final outcome of this legal battle could completely change the game for Aeromexico. I mean, if they lose the Delta JV, that would be a devastating blow. It would gut their network and their revenue in what is their most important international market. The stakes, honestly, could not be any higher. So all of this leaves us with a company that is, quite literally, flying straight into some serious uncertainty. You can really see the balancing act Aeromexico is trying to pull off here. In one corner, you have these incredible strengths. Their operations are super resilient, and now they've got all this new cash from the IPO. But in the other corner, you have these huge looming risks. A shaky economy, sure, but the big one, the one hanging over everything, is the potential breakup of that critical Delta JV.
And that brings us to the final critical question for the airline. They're now cash rich, which is great, but they could be about to become partnership poor, and that's terrifying. So can all this new financial strength, all this operational resilience, can it be enough to get them through this regulatory storm? That, right there, is the multi-billion-dollar question that's going to define their future.